Oh well, today is the day where we do some analysis. Ladies and gentlemen, Asian guy here. We need to take a deep breath and look at the chart. Yesterday felt like the end of the world, but today we realize it wasn't just a market correction, it was a declaration of war. If you've been watching the silver price swing like a pendulum between $84 and $70, you're likely looking for someone to blame. And today, I'm pointing the finger exactly where it belongs: Beijing. While the Western world was distracted by holiday shopping and retail FOMO, the Chinese Ministry of Commerce just dropped a bombshell that has effectively broken the global silver pricing mechanism forever. We are no longer playing by the rules of the COMEX or the LBMA. We are now playing by the rules of the dragon, and the dragon has decided that it is time to lock the gates. Before we break down the specific details of the new export licensing system, the massive Shanghai premium that is draining Western vaults, and the terrifying reality of what happens on January 1st, do me a massive favor. Hit that subscribe button right now and turn on all notifications. We are entering the most volatile 48 hours in the history of the silver market. And if you aren't getting these updates in real time, you are essentially flying blind into a hurricane. If you believe that silver is the ultimate weapon against the failing paper system, smash that like it button to let the algorithm know that we aren't selling. We are just getting started. The headline that everyone is missing, buried under the noise of the $10 price plunge, is that China has officially broken the silver market. For decades, the price of silver was discovered in London and New York. If the Western banks wanted the price to go down, they simply printed more paper contracts. But that game only works as long as there is a steady flow of physical metal to back up the illusion. Yesterday, that flow hit a brick wall. The Chinese government announced a comprehensive restructuring of its silver export policy, moving from a relatively open market to a strict, state-controlled licensing regime. This isn't just about taxes or tariffs, this is about control. By requiring every ounce of silver leaving China to be licensed by the Ministry of Commerce, Beijing has effectively turned silver into a strategic geopolitical lever. To understand why this breaks the market, you have to understand China's role in the silver ecosystem. They aren't just a producer, they are the world's primary refiner. Even silver mined in other parts of the world often flows through Chinese refineries before it reaches the global market. By implementing this licensing system, China can now choose who gets silver and who doesn't. They can prioritize their own solar industry, their own AI infrastructure, and their own military-industrial complex while leaving the West to fight over the scraps. This is the definition of resource nationalism, and it is happening at the exact moment that the global silver deficit has reached a breaking point. While the COMEX paper price was being hammered down to $73 yesterday in a desperate attempt by Western banks to trigger retail stop losses, the Shanghai Gold Exchange was telling a completely different story. The Shanghai premium, the difference between the price of silver in China and the price in the West, exploded to over $9.9 an ounce. Think about the gravity of that for a second. If you can buy silver in New York for $70 and sell it in Shanghai for $82, what do you think the smart money is doing? They are buying every single physical ounce available on the COMEX and shipping it east. This is a massive one-way drain of silver from west to east, and it is being facilitated by the very manipulation intended to keep the price down. China isn't breaking the market by accident. They are doing it by design. They have watched the West weaponize the dollar, and now they are weaponizing the one thing the dollar can't buy more of: physical atoms. As we approach the January 1st deadline for these new licenses, the physical vacuum is accelerating. We are seeing record outflows from the LBMA vaults in London. We are seeing COMEX registered silver drop to levels that would make a risk manager lose sleep. And yet, the mainstream media is telling you that silver pulled back because of technical exhaustion. Ladies and gentlemen, don't believe the lies. The pullback was the paper market, screaming in pain as the physical market moved to Beijing. The timing of this move is surgical. China waited until silver reached a historic record high of 84, a level that forced the CME to hike margins and created maximum fragility in the Western paper markets before they tightened the screws. They knew the Western banks would be forced to slam the price down to save themselves, and they used that artificial dip to accelerate their own accumulation. Every time you see a $5 or a $10 drop on your screen, you're witnessing a gift from the Western banks to the Chinese central bank. They are selling the future of the Western industrial base for pennies on the dollar just to maintain the illusion of a stable currency. We have to look at the critical minerals designation that the US government just handed to silver. Why now? Why after all these years of silver being ignored? Because the Pentagon finally realized what China has known for a decade. Without silver, you cannot fight a modern war. You cannot build a precision-guided missile. You cannot build an advanced fighter jet. You cannot even maintain a secure communications network. By listing silver as a critical mineral, the U.S. admitted that we have a massive strategic vulnerability. And China just exploited that vulnerability by closing the export door. This isn't just a finance story. This is a national security crisis disguised as a market correction. The plunge into you saw yesterday from $84 back to $74 wasn't just a market correction. It was a financial heart attack caused by the realization that China has officially weaponized the periodic table. While Western traders were looking at their RSI indicators and trying to time the top, Beijing was looking at the long-term strategic map of the 21st century. By implementing this new export licensing system on January the 1st, 2026, China has effectively told the rest of the world, if you want to build a green future, you're going to have to pay us in more than just depreciating dollars. This is the first time we've seen silver treated not as a commodity to be traded, but as a strategic asset to be hoarded. To understand how China broke the market, you have to understand the 8 Rosuzoring Shanghai premium. For months, we've been tracking a massive price gap between the Shanghai Gold Exchange and the COMEX in New York. While the West was pricing silver at $60 or $70, China was already paying $80. This created a massive physical vacuum, where silver was being sucked out of Western vaults and shipped to the East to capture that $8 profit. The Western banks tried to stop this drain by slamming the paper price down, but China just used those dips to buy even more. They didn't just break the price, they broke the supply chain. Why does this matter to you? Because China controls between 60 and 70% of the world's silver refining. Even if the silver comes out of a mine in Mexico or Peru, it often has to go through a Chinese refinery to reach the purity levels required for high-tech industrial use. By requiring a state-issued license for every gram of silver that leaves their borders, China has created a bottleneck that the West cannot bypass. They are using the exact same playbook they used with gallium, germanium, and graphite. They aren't banning exports, they are managing them. And in geopolitical terms, management is just a polite word for leverage. The response from the tech world has been one of pure panic. Elon Musk, the man whose companies are perhaps the most dependent on silver for everything from Tesla circuit boards to SpaceX thrusters, retweeted the news of China as export curbs with a chilling 4-word warning, "This is not good." He knows that the silver squeeze of 2025 isn't a retail meme. It's a structural failure of the global supply chain. When the world's most aggressive industrialist expresses concern about a metal's availability, you know the $10 drop in price yesterday was a complete and total illusion. It was a paper crash in a physical crisis. Think about the sheer scale of what China is doing. They aren't just protecting their supply. They are fueling their own anti-involution campaign. They are consolidating their solar and EV sectors and ensuring that their domestic champions have all the raw materials they need to dominate the global market for the next decade. While the US was busy printing money to subsidize demand, China was busy securing the supply. The US government and S decision to add silver to the critical minerals list in November 2025 was a day late and a dollar short. It was an admission of defeat. We are now in a position where we have to negotiate with Beijing for the very metal required to maintain our national security. This is why the historic 2025 rally is entering its most dangerous phase. We are moving from a price discovery phase to a panic acquisition phase. When the export licenses take effect on January 1st, we will see the true price of silver. It won't be what you see on your Robinhood app or your trading terminal. The true price will be whatever a major solar manufacturer is willing to pay to keep their factory from shutting down. We are talking about a world where silver could have a bid-ask spread of $5 or $10. The market hasn't just been broken, it's been bifurcated. There is the Western paper price, used for bank balance sheets, and there is the Eastern physical price used for real-world production. If you're holding physical silver today, you are essentially holding a front-row ticket to the end of the Western-dominated financial system. The banks are desperate to shake you out of your position. They want you to see that $74 print and think, "Oh no, I'm losing money." But you aren't losing money. You're gaining power. Every ounce you hold is an ounce that a bank can't use to settle a contract. Every ounce you hold is an ounce that China can't use as leverage against the West. We are watching the great decoupling happen in real time, and silver is the fault line. To understand how China broke the market, we have to look at the physical vacuum that began in October 2025. While the West was asleep at the wheel, China exported a record-shattering 660 tons of silver in a single month. Why? Because they were draining their own domestic inventories to feed the London vaults that were dangerously close to running dry. But that was a one-time emergency flush. Now, the Shanghai Futures Exchange is reporting that its silver stockpiles have plummeted to just 715 tons, an 86% collapse from the 2020 peak. China has run out of excess silver to bail out the West, and their response is to pull the ladder up behind them. Starting January 1st, 2026, the rules of the game change forever. Under the new Ministry of Commerce regulations, only companies that produce at least 80 tons of silver annually and hold a $30 million credit line will be even considered for an export license. This effectively wipes out the hundreds of small and mid-sized refiners that the global market relies on for swing supply. By narrowing the field to only a few state-controlled giants, China is centralizing its silver supply in the hands of the CCP. This isn't just about efficiency, it's about metal diplomacy. If a Western solar company or a defense contractor needs high-purity silver in 2026, they won't be calling a broker in London, they'll be negotiating with a state-approved entity in Beijing. This is the exact same resource weaponization strategy we saw with rare earths and graphite, but with one massive difference: silver is also a monetary asset. By breaking the silver supply chain, China isn't just hurting Western industry, they are undermining the entire Western paper-based financial system. When the world realizes that there is no silver available to settle the 356-to-1 paper to physical ratio on the COMEX, the dollar's role as the global reserve currency will be tested like never before. China is using the white metal as a wrecking ball against the greenback. The industrial implications are already being felt in real time. We re-hearing reports that major solar panel manufacturers in Europe are already facing force majeure notices from their Chinese suppliers. These suppliers are citing regulatory uncertainty as the reason they can fulfill their 2026 contracts. Translation? They're waiting for the license rules to kick in so they can renegotiate prices at $100 or $120 an ounce. This is how you break a market. You don't need to stop the supply. You just need to create enough uncertainty that the just-in-time model of the West collapses under its own weight. Think about the solar sector. In the fourth quarter of 2025, Chinese domestic solar installations hit a seasonal peak, consuming nearly every ounce of silver refined in the country. Now, add on the demand from the AI revolution. China is currently building out its own domestic GPU and semiconductor manufacturing capacity to rival NVIDIA. Every one of those high-performance chips and servers requires silver. By implementing export licenses, China is ensuring that their silicon shield is built first. The West gets the leftover metal, but only if they pay the geopolitical premium. As we look at the chart today, the $74 price level is a complete and total fabrication. It is a price for a metal that you cannot actually buy in size for immediate delivery. This is why the Shanghai premium is the only number you should be watching. If silver is $74 in New York but $83 in Shanghai, the New York price is a lie. It is a price for a digital contract that has no chance of being converted into physical metal. China hasn't just broken the market, they have exposed the paper matrix for exactly what it is, a tool for price suppression that has finally run out of runway. We have to look at the math, because while the Western media is obsessed with the price action, the real story is in the settlement. We are currently witnessing a systemic failure of the COMEX and the LBMA that has been decades in the making. For years, the paper-to-silver ratio has been the industry's dirty little secret. At the peak of the rally to $84, that ratio hit an eye-watering 350 to 1. That means for every single physical ounce of silver sitting in a vault in London or New York, there are 350 digital claims on that ounce circulating in the financial system. China didn't just break the supply chain, they have effectively called the West's bluff on this massive fractional reserve silver system. The plunge to $74 was a desperate attempt to reset that ratio. When the price is high, people start asking for delivery. When they ask for delivery, the vaults go empty. When the vaults go empty, the game is over. By slamming the price down, the institutions are hoping you'll take your cash settlement and walk away. But China isn't walking away. They are doing the exact opposite. They are using their state-owned banks to stand for delivery on every single contract they hold. They are forcing the West to produce the physical metal that everyone knows isn't there in the volumes required. This is the Minsky moment for the silver market. It's the point where the debt, the paper promises, can no longer be hidden by the physical reality. Think about the London vaults. The LBMA is supposed to be the world's most secure stockpile of silver. But throughout late 2025, we've seen a hollowing out of these reserves. Reports indicate that a significant portion of the silver reported in these vaults is already encumbered, meaning it's already been leased out, sold multiple times over, or is being held for ETFs like SLV. When China implements its export licenses on January 1st, the Western leasing market for silver is going to freeze. Why would anyone lease out their silver for 1 or 2% interest when they know they might never be able to replace it? The liquidity that keeps the Western market functioning is about to evaporate. This brings us to the most contemplative and perhaps the darkest part of this analysis. We are watching the end of price discovery as we know it. For over a century, the price of silver was a signal. It told us about industrial health, about inflation, and about geopolitical risk. But when China broke the market, they turned that signal into a weapon. If the price of silver is $84 in one part of the world and $74 in another, the signal is dead. We are moving into a dark market era where the real price of silver will be determined in private, state-level negotiations. It will be barter for barter. Silver for oil, silver for semiconductors, silver for food. The Western investor is currently being gaslit by the financial headlines. They want you to believe that the market is functioning normally, that the blow-off top was just a technical event, and that China's move is just policy. But policy is just a polite word for control. By controlling the refining, the supply, and now the exports, China has ensured that the fourth industrial revolution, the world of AI, green energy, and advanced robotics, must pay a Beijing tax in the form of silver premiums. This is the great reset of the commodities world, and silver is the first domino to fall. We also need to discuss the strategic stockpile of the United States, or rather the lack thereof. In the 1960s, the U.S. held billions of ounces of silver. Today, the strategic national stockpile has essentially zero silver left. We sold it all to balance budgets and keep the price low for industrial users decades ago. Now that silver is a critical mineral, the U.S. government is in a position of extreme weakness. They have to rebuild a stockpile from scratch at the exact moment that China is closing the door. Where will the metal come from? They can't buy it from the COMEX because the COMEX is already being drained. They can buy it from the miners because the miners have already pre-sold their production to the tech giants. This is the bifurcation I've been warning you about. On one side, you have the legacy system, the banks, the paper contracts, and the $74 spot price that exists only on a screen. On the other side, you have the new reality, sovereign nations, industrial titans, and a physical price that is rapidly approaching triple digits. China broke the market by proving that the legacy system can no longer fulfill its promises. They have forced the world to choose between digital illusion and atomic reality. If you're watching this on December 31st, 2025, you have less than 24 hours before the new reality becomes the law of the land in the silver market. The volatility you're seeing today is the static before the signal changes forever. If you've been waiting for a sign that the silver market has changed, this is it. China didn't just break the market, they ended the era of Western price suppression. The historic 2025 rally was the market's last attempt to play by the old rules. 2026 is when the new rules take over. Stay calm. Take a deep breath. Look past the red candles. The price is a lie, but the scarcity is very, very real. Every ounce you hold in your hand is an ounce that exists outside of the paper matrix that China just shattered. We are moving into the final hour of the old silver market. Make sure you're positioned accordingly. We are now standing at the edge of the abyss, and the clock on the wall is ticking down to the most significant structural change in the history of the silver market. As we approach the final hours of 2025, the paper market in the West is in a state of absolute paralysis, while the physical market in the East is preparing to slam the door shut. When the sun rises on January 1st, 2026, the world will wake up to a new reality where silver is no longer a freely traded commodity, but a state-controlled strategic asset. China isn't just restricting silver, they are implementing a digital iron curtain that separates the metal from the people who need it most. You have to ask yourself why the mainstream media is focusing on the margin hikes and the 6% drop on Monday rather than the systemic locking of the supply chain. It's because the margin hike is a distraction, a smokescreen. It's designed to keep you looking at the price while they take away the product. If they can keep the retail public focused on the $74 ticker, they can prevent a general panic that would lead to a run on physical bullion dealers. But the smart money isn't looking at the ticker. They are looking at the 80-ton production requirement for the new Chinese export licenses. They are looking at the $30 million credit line requirement that effectively centralizes silver control under the CCP. This is the end of the globalized silver market. For 30 years, we lived in a world where you could buy silver anywhere, ship it anywhere, and refine it anywhere. That world ended yesterday. We are moving into a bilateral world. If you are a Western tech company and you haven't secured a direct contract with a Chinese state-approved refinery by tomorrow, you are officially at the mercy of the Ministry of Commerce. This is how China broke the market. They didn't destroy silver, they destroyed the access to silver. They've proven that in a high-tech war, the person who holds the refined atoms is more powerful than the person who holds the printed paper. And let's be honest about the Elon Musk factor. When Elon warns that this is not good, he isn't talking about his stock portfolio. He's talking about his production lines. Tesla is currently the world leader in EV technology, but that lead is built on a foundation of Chinese refined minerals. If silver prices stay at $80 or $100, the cost of a Tesla increases by thousands of dollars. If silver becomes unavailable, the factory stops. Period. This is why the U.S. government finally added silver to the critical minerals list in late 2025. They realized, far too late, that the green revolution is essentially a silver revolution. And we've handed the keys to our primary geopolitical rival. So, where does this leave you? If you are a silver stacker, a long-term investor, or someone just trying to protect their purchasing power, the next 48 hours are your Gethsemane. The volatility will be sickening. You will see headlines shouting, "The silver bubble has burst," and investors flee precious metals. You will see $5 swings in minutes, but I want you to look past the screen. Look at the empty shelves at your local coin shop. Look at the 3-week shipping delays for 1,000-ounce bars. Look at the record premiums on the Shanghai Gold Exchange. That is the truth. The $74 price on the COMEX is the lie. We are witnessing a generational repricing. Silver has been suppressed for so long that the breakout feels like a crisis. But it isn't a crisis for the metal. It's a crisis for the debt-based system that tried to ignore it. As China launches its silver weapon on January 1st, the Western banks will be forced to either let the price go to 150 or risk a total default on the COMEX. There is no middle ground left. The historic 2025 rally was the market's final warning. The plunge on Monday was the system's final gasp. As we close out this year of unprecedented gains and terrifying volatility, remember that the Asian guy here told you to take a deep breath. We have prepared for this. We have watched the inventories drain. We have watched the Shanghai premium grow. We have watched the critical mineral designation become law. None of this is a surprise. It is the logical conclusion of a system that tried to print its way out of a physical shortage. China didn't break the market. They simply turned the lights on, and the West is blinded by what it sees. Oh, well, this has been the most intense analysis we've ever done on this channel, but these are intense times. If you've made it through all of this deep dive, you are ready for what's coming in 2026. You aren't a spectator anymore. You are a participant in the new silver standard. Before you go, make sure you hit that subscribe button and share this video with everyone you know who is still holding on to the paper illusion. We need to wake as many people up as possible before the January 1st deadline. Give this video a like if you're rebuying the dip and you know that the silver squeeze is only in its second inning. And leave me a comment below. What is the first thing you think will happen when the Chinese markets open on January 2nd? I want to read your theories. This is a community of the informed, and your voice matters now more than ever. Stay strong, keep your silver close, and keep your mind even closer. This is the Asian guy, signing off for 2025. I'll see you on the other side of the deadline. Take care and stay safe.